Good morning, guys. It is April 11th, 2019. We're going to review the market moves daily for April 10th, 2019, and make some projections for what's coming next. So here's the top three observations for April 10th. The tech sector fails to break lower. So as we've seen some gaps initially lower in the stocks of Apple and Amazon pre-market, actually they spiked by the end of the day higher, and so did the cloud stocks. Now, this could actually represent some of the best opportunities to come in and short these things. We'll talk a little bit more about that shortly. Now, number two observation, the Federal Reserve minutes. Now, the Federal Reserve minutes typically do not impact the market greatly because it's kind of old news type information. It's just the review of what has taken place in the Federal Reserve meeting last time. And clearly, there's just nothing, no surprises there. So we got a rather muted reaction. And, clearly they're not in any shape or form to raise the interest rates here. Now the main pressure on the Federal Reserve is to actually lower them and increase the quantitative easing. That's exactly where the opposite of where the market sentiment was 6 months ago. Now, we correctly predicted that on our channel in September, saying that, hey guys, the charts of gold and some other charts were pointing to the fact that the rates were not going to increase, and we predicted that there's going to be within the next 12 months, that's dated back September 2018, that they were going to talk about quantitative easing and they were going to talk about lowering rates. That's exactly what's happening. Now, sometimes, these things that they have kind of a delay effect with the markets. So clearly the fact that they're not raising the rates does not speak for the quality of the economy. You don't talk about quantitative easing and you don't talk about lowering interest rates when everything is fine with the economy. So as we're going for the stopping stage in the markets right now, the outcome is clear. What is not clear is the timing on when things are going to start breaking down severely. So this market, guys, will test your patience to the max. Okay, some of the positions that we were taking on the short sides, they're challenging, okay, because initially they were making money, then some of the gains were given back. And so this environment has been tough. However, what we're looking at when we're looking at the charts, okay, our main trading theory is the fact that the market will unwind is still there. Nothing has changed in the charts. The market keep moving on lower volume when they do move higher, and they keep selling off on higher volume. Now, with that said, everybody expected this review of the Federal Reserve minutes, so the reaction has been rather muted. We didn't drop. We didn't essentially go substantially higher within a few points from where we have been trading literally for the course of the last 7 days now. Now, as a result of this muted reaction, nobody panicked. Okay, VIX is back under 14, and I think really we should finally get some breakthroughs on the VIX when the market is going to begin reporting earnings this Friday, especially Monday, Tuesday, Wednesday, as more companies begin to report earnings. We should see some more volatility in the market. Until then, VIX is probably going to keep going between this 13 and 14 level. Now, here's some homework for you guys. Okay, for those of you that are trying to make the best of the Trade Like a Rockstar course. Okay, as pointed out in the course, it's very important to start measuring the first few companies, especially large companies that are popular with institutional investors, to get a temperature of what type of behavior we could project on the following few weeks of the earnings season. So the homework is this. I want you guys to pull up the charts of the following companies: JP Morgan, Wells Fargo, and PNC. I want you to take a very good observation of where they're going to be trading tomorrow and how they will be reacting to the earnings on Friday. I want you to measure the initial reaction, which is going to be pre-market. All of these companies are going to be announcing earnings pre-market. So between, I would say, 7 and 8 o'clock, if you pull them up on your 1 day, 1 minute chart, these things are going to be moving, and they're going to be moving on volume. So the idea is to measure the initial reaction. Are these stocks initially popping higher and then selling off? Are they initially selling off and they're coming in and buying the dip? So we want to identify the predominant behavior in the stocks. Now, this morning, just got one company, Fisternal, that deals with the housing sector, construction. materials and so on. So typically this is not the stock that we trade options on, but it is reported earnings. It could give us some clues about the sectors such as housing and construction and so on. So it would be worthwhile to look into that report today and see how that stock reports. Here's the chart of JP Morgan so far. And just guys, let's not make things complicated. Okay, this is not a bullish chart. Okay, you got two tops right here. You got 1, 2, 3 tops, resembles a head and shoulders. Like trades severely down on much higher volume. Same thing right here. I mean, this is an exact parallel of right here, the behavior that we have seen right here. This does not look bullish, and we're hitting this major 200 level of resistance. So the ultimate question is, this is going to set down to how the rest of the financials is going to be reporting earnings. Okay, is JP Morgan going to break above this 200-day moving average line? Well, everything on this chart points to the fact that it won't. However, if we study the behavior of JP Morgan initially after earnings, in 90% of the cases, they actually pop higher and then sell off. Now, the question is, where is it going to pop from? Because we still got another trading day to go. So today, we're really going to find out if they are selling JP Morgan going into the earnings or if they are actually buying it. Okay, so that's going to be a very interesting stock to watch today, as well as Wells Fargo. Now, Wells Fargo clearly is showing us the behavior that it is definitely selling off into the earnings report. As you can see, both stocks, the charts are almost identical. You have huge sell-off right here, parallel to this huge sell-off right here, both with increased volume in case of sell-offs, both moving higher on lower volume. This is not a bullish chart, guys, by no means. And PNC is more like a regional bank, and look, same thing. Like these charts, they're almost identical, guys. Do you see the sell-offs happen on higher volume? The moves higher happen on lower volume. The both, actually all three of them are under this 200-day moving average, which is not bullish. And you know, you've got some definite signs of distribution here. So there's another one to watch today to see if this stock is going to be selling off into the earnings report before Friday, or if it's actually going to be higher. So that's going to be your homework, to pull up the charts of the three stocks, study their behavior the day before earnings, because that's going to be very relevant next week when we're trying to place trades on some of these other financials that will be reporting their results. Okay, today's market move for April 10th, we get a move 10. And as you can see in the brackets, okay, we did have the behavior of a 7. So here's how it looks. Some of you might have been confused. So the behavior of a 7 is what? The market opens higher, it pulls back, and then it moves higher by the end of the day. So lately, what we've had is a situation where I've been sending some alerts like, hey, we got a confirmation in the move too. And every time I've done that, the market has actually reversed. Okay, so that tells us that the predominant behavior is still quite bullish in the market. However, I mean, when we look at these sell-offs intraday, I mean, they happen on larger volumes, and this is pretty much the behavior that we have seen. They continue to buy these dips. However, history points that this is coming to an end. So let's examine what made us lock this move as a move 10. Federal Reserve minutes. Anytime you guys have a Federal Reserve announcement, it's typically going to result in a move 9 or 10. In this particular case, it's important to observe the reaction at 2 p.m. And again, this time the reaction was rather muted. A lot of times things could really spiral out of control. You can see some insane moves to the upside or the downside. The key is to pay attention to not just what happens initially after the initial announcement, because see, you have some knee-jerk reactions right here. But where does the move ultimately lead by the end of the trading session? So a lot of times spikes higher will result in a significant move lower by the end of the session. In this case, initial spike higher, so the initial reaction does not hold, sells off a little bit, sets double bottom, moves from there. Now, looks like pretty big move, but really in terms of the points, or I mean, we went from 28.86.87 to 28.94. I mean, that's an 8-point move. This is where we've been trading for pretty much majority of the day, 28.89. So really like a 6-point move after the Fed minutes were released. So really nothing has really taken place. But clearly there's not many people that are panicking yet, even though there's so many signs of the market top that we're observing out there. The top is still, the importance of logging this as a move 10 is to understand that a lot of these moves 9s and 10s that will be reversed within 48 hours. Now at the end of the video I'll share some historical data giving you some specific examples. The 2-day sequence is going to be 310, which is not unusual. This is how the moves look on your chart. Here's your move 3 and the move 10 right here. 5-day sequence is going to be 714310, and this is how this sequence looks on the chart. The VIX is clearly still low numerically. Uptrend breaks on day 3. So we had 2 days higher in the VIX, and today it actually resumed the downtrend. So it opened at 14, right at 14, went to 14.3, and finished the day at the lows at 13.3. VIX chart unfortunately looks quite bearish. Okay, we're noticing that this high resembles of a top in formations on the VIX. The chart of VIX closed that last gap. In the previous video we talked about the first gap, second gap, third gap, 3 gaps high was very bullish signals. However, it closed at the lows of the day at 13.3, and therefore it has actually closed this gap, and it stopped right at the area before this gap higher was created. Now sometimes when these tops form close to the bottom of the range, okay, as crazy as it sounds, they are actually could reverse into a bullish formation rather fast. So today what we're watching on the 11th to see if VIX is actually going to regain this level right here, and see if possibly we can get the VIX to reopen above this 13.8, which would reconfirm this gap that it created recently. And in this case, it has a probability of resuming the uptrend. Considering that the financials are announcing earnings on Friday, we could easily see the VIX to 15 level by Friday evening if the response to the earnings and financial is going to be a sell-off. Now, next market moves are 1, 2, 3. So as you can see, there is a higher probability of a bearish move today in relation to the bullish move. Now, there is one concern that I actually have with this, and if we look at the historical data, right, for example, the VIX environment could be compared to that of July 2019. And in July, we had a situation where we've recorded a move 10, and it followed by a move 1. Ultimately, the market reversed its track on the 3rd day after the announcement. We had a pretty significant move 3. Now that was in a lower VIX environment similar to the one that we have now. In a rising VIX environment, in other words, if we have a gap higher and the VIX resumes its uptrend that it was trying to set in the last few days, then move 10 could be followed by a move 3 the following day, as we see in an environment right here in October. However, of course, VIX was higher numerically. It was above 16. As you can see, after the 10, we had a move 3, 2, 2, which were all topping moves. So there is a probability that we may see something similar in the markets. Again, we're getting the move 3 and VIX confirms the uptrend. There's a great probability that we may see something like this 3, 2, 2 in the following few days. Okay, now here are the key takeaway, guys. Expect more volatility Friday because the financials are going to begin to announce earnings. So buying VIX calls, as bearish as VIX is, because if you do pull up the stock charts on daily and you take a look at the VIX, it recently formed a double bottom. So maybe yesterday with this Federal Reserve minutes and reiteration that, hey, the rates are not moving any higher anytime soon, maybe we just got people too complacent. So I think that could reverse at any moment and we should be ready for it. So pay close attention how institutions respond to JP Morgan and Wells Fargo earnings on Friday morning. The risk reward right now, guys, is still to the downside. There's probably a 5-10% chance that the markets will move higher. From here is about 80-90% probability that the markets will move lower. Again, We're still waiting for the confirmation on the market moves. And today would be an interesting day if we do get a move 3. In other words, the market is going to rethink their muted reaction to the Federal Reserve minutes from yesterday. If we do get a move 3, definitely expect some further deterioration and some bearish moves subsequently, meaning just as in the case in October, we had a 10-3-2-2 combination. It's going to be an awesome combination because in the move 2, while everybody's still bullish, market goes high, you come in, you short it, and collect the profits at the bottom by the time it falls lower. And you keep doing it for a couple of days in a row. Some really cool opportunities, guys, are coming up. Look, I forgot to point one crazy thing. Pay attention to ICPT. ICPT is the ticker. Highly controversial stock. Used to trade at 500, fell to 60, now 121. We had some successful, unsuccessful trades throughout the years on this thing. Guys, pay attention to ICPT. Today could be the day where this thing could go $60, $70 higher. It's currently traded at 121, and it's, of course, 4 a.m. This morning. So I'm not sure exactly where it could open up, guys, but ICPT should be on your radar. Guys, also, with that said, I hope you catch some really cool trade on the ICPT today, but make sure you take this weekend to study the earnings course. Get ready to trade earnings next week because it's going to be extra busy. It's going to be extra insane, and I want you guys to be ready to fully take advantage of the opportunities that the market will present us with, and I want you to be 100% ready to take action. So with that said, click the link below, study the course, let's rock, let's make this week the best week ever.